Alright, it's recording. Cool. Alright, hi guys. I've got a different video planned for today. I'm just gonna talk about what I think is gonna happen next week. So this is my this is how I basically prepare myself for each trading week. So I'm on the monthly chart right now, and as you can see, I've got my Fibonacci drawn from this high to this low, and reason for that is because I've got this as a swing high, this is as a swing low. Now a swing high is basically a high that took out previous highs, and a swing low is a low that took out previous lows. And the middle candle should be higher than the one on the right and the one on the left. Same here, higher. Well, this one is lower than the one on the left and one on the right. Now we came from this basically price range, right? We came and we traded all the way down right into this monthly fair value gap. After price swept all these lows, then it rejected, started trading back higher. Once we displaced, price came back and traded into this fair value gap. It didn't respect the fair value gap, it continued trading down lower, right into this rejection block right here. So within this rejection block, we've also got a fair value gap within it. Price came and traded into that, respected the fair value gap, and started trading higher and higher, right? Now, my long-term draw on liquidity is basically inside this fair value gap, and I will be favoring longs on dollar until we reach the draw on liquidity. If we go down into the weekly, right, before we go down into the weekly, just looking into this price range, you can see we've got the premium and the discount, and price consolidated all these candles right here. You're seeing 1 2 3 4 5 6 7 candles. This is 7 months of price action just consolidating inside this range, and then we run it after. Price is literally just trading back higher. We disrespected this fair value gap. Once this fair value gap gets disrespected, this will become an inversion fair value gap, right? As you guys can see, we've just been dancing around this range. If price had intention to trade now lower, when we got to this range, this price action right here, you should have just traded through it, but it didn't do that. Price traded into this rejection block and it started trading back higher. You know, this is why I'm actually favoring price to trade higher into this fair value gap, and then potentially continue trading down lower, or we might just go higher and take out this old high, but I highly doubt it. Now if I go into the weekly, this low right here was the wick we saw on the monthly chart, right? Now as you can see, this is a fair value gap which price came and tapped into it, fully balanced the fair value gap, right? And we've also had a candle closure in there. Then it started trading higher. Once we trade higher than these down close candles right here, this will become then an order block, right? Price came back and traded into this fair value gap right here, which is also the mean threshold of this bullish order block, and it started going higher again, right? And we came back, we tapped into this fair value gap, price continued. Now what you're seeing is that all these bullish order blocks is supporting price higher to further show that institutional order flow is actually bullish, because if we are bullish, all down close candles should support price, right? Now all these down close candles should support price higher. You see, we came tapped into that, this plays higher again. This is a bearish order block. Sorry, this is a bullish order block. Price came and tapped into that again. It started pushing higher. Now this is where we are currently, right? Where we are currently. If you have a look closely, this is a bullish weekly candle. Now pay attention to the bodies. And this is the opening price of that bullish order block. I do not care about what these wicks do, right? I only care about the bodies of the candles and where the candle body closes, essentially the closure of the body candles. Now, all this is manipulation down, right? Now, even ICT, he himself says the wicks does the damage and the body tells the story. The body is essentially has the main orders in there, right? Now, we've came here, we've swept this previous week low, right? And this previous week low, I believe, is also a previous month low. Yeah, so it's a previous month low. If we have a look right here, we swept the previous month low. Now, given the context of us seeking for bullish prices, this July candle that just opened right here, monthly candle, I expect it to manipulate slightly into the middle range of this candle right here and potentially expand higher, right? Now, if we have a look into the Forex factory, we've got NFP on Friday, and we already know this is going to be a significant news driver in the market. Price is likely to drive one way on this day. This is a day that I avoid to trade anyway, and the day before NFP as well. The price action is likely to be more choppy. Now that leaves Wednesday, Tuesday, and Monday. We've got post NFP. We might get some sort of crazy volatility, but it would not be as significant like Friday, right? I will not look to trade these days, but early on the week I might look to work around these 3 days, right, before NFP. But the one thing that I always look for in price is the swing point, which is these signatures right here, especially after we raided liquidity, right, and then the candle come and closes back into the range after we've had a order pairing right here. This is a significant price action you would see. Essentially, you've got a 3 bar swing. Whenever you see the 3 bar swing, the fourth candle most of the time is always going to be expansionary candle, right? Because if you have a look right here, we've got a low, high, and then we've got failed swing right here, and this candle displaced, right? Now, if you have a look right here, also the 3 bar candle formation is always going to have to be a low on the left. The middle candle have to be the low that basically run liquidity, and then the other candle, which is a candle that closes back in to the range, or yeah, essentially traded back into the range. And then the fourth candle is always going to be an expansionary move, right? Which is essentially going to go into your intended direction. And that's the same exact formation that we're receiving right here. We swept the previous week low, previous month low, sorry. So this low, this low is lower than this low, and I'm expecting this to be a higher low right here, and we could expect expansion. Now, I believe this month will be the expansionary move into this fair value gap. If not, the next candle would be the one. Now, if we go into the weekly candle, we are still in the discount from the high time frame of the monthly, dealing range this low to that high up here. Now, on the weekly chart, sorry, you can see it's the same scenario, right? We've got the swing low right here, price traded higher, broke, and basically changed it in the state of price delivery. It came back down, traded into this fair value gap. Notice the body is essentially closing into the fair value gap, right? Right into the fair value gap, and it started displacing higher again. And then this order block become a valid order block again, and this order block supports price. If you have a look from here, also this order block price came and tapped right into its opening price, and it literally just stopped dead at its tracks. What did he do? He rebalanced this fair value gap, right? And he continued. Next candle came and swept the previous candle low and closed this fair value gap, and he continued. Once this candle expanded higher, this weekly candle, it validated this order block and it left fair value gap. Market came back. At this point, all they were doing is basically engineering liquidity right here again. We got the original consolidation right here, and then we got another market maker buy model, which is also engineered right here, right? So price came back, it tapped into the order block, rejected. Next candle came, it was an inside candle. I did not sweep previous week high or previous week low. Next candle came back again, it traded down lower, right into the order block. But have a look, you see the opening price. This candle came in just close to the opening price. Now if we pay close attention to these OHLC right here, open high low close essentially. So if you have a look right here, pay attention to the O, right, which is this right here. The candle opening price is 404, sorry, it's 104 and then 487, right? And this candle's closure is, which is right here, is 104 and then 497, right? Which means that this candle came close to the opening price of this candle, but it did not close through it, right? And this candle opening price as well, which is right here. Pay attention to this opening price. So it's 104.97. So this candle's opening price and this candle's closing price is basically the same, right? If you have a look right here, closure, it's right there, 104.497. Opening price of this candle, which is here, 104.497. This is not random. You know what I mean? It's not random. And if you have a look, the next following weeks, it danced around that range. And then what happened on this candle? It opened right here. It swept the previous month low. And then we started expanding higher, which is the June month that's just essentially passed away, right? Now, if you have a look right here, this order block, it was a high resistance order block. Why? Because institutional order flow is already bullish and they seeking to attack this buy side liquidity and trade this monthly fair value gap. Now, if this was not a high resistance order block, this candle right here shouldn't have been holding price right there. If we have a look, we've danced around this order block essentially at this key level for how many weeks? We got 1, 2, 3. On the fourth week, that's when we literally started expanding away from it. Right? Now, if you do not understand the context of a high probability order block, you would have been caught inside this chop right here because the market is not really moving anyway. All they're really doing is accumulating more orders at this range right next to this order block before sweeping the liquidity which they've engineered to pair it with, to basically do their order pairing before running price higher, right? Now after sweeping the previous move low, we start expanding higher. And what do we have again? Another bullish order block right here on the weekly chart. Now this bullish order block became a valid order block once we traded above it, and we've also got a fair value gap left within this range. But I expect this order block to hold as a strong resistance, right? Now there's a big possibility that the market would still come back and tap into this fair value gap. But I personally do not want to see that. Why? Simply because we are already close to this buy side liquidity right here, and this buy side liquidity also, this is a market maker buy model as well as a market maker buy model, but I'm mainly focused on these relative equal highs right here to be run, so if we have a look right here, we've also have a balance price range. We've got a candle that's gone up, down, and then another candle's gone up again, right? So this fair value gap, I would want to see remain open. I don't want to see it being traded through to. But if it does trade into it, it does not matter also because it gives us more opportunity to catch longs to get into that but ideally I would want to see this gap open. So this would be our breakaway gap. If I go onto the daily chart, you will see right here, this is where the order pairing happened, right? So we've got the liquidity rate right here, price displays. We came back, tapped into this fair value gap, fully closed off, and then we continue going higher. This bullish order block right here is supporting price. Price displaced again. This bullish order block is also supporting price, right? Now we've got an order block which is validated, another order block which is also validated. This is how you frame your high probability order block. A high probability order block has to be basically when smart money have done their order pairing at a key level. A key level is either a premium or a discount, right? Now, from here, Monday, I would want to see Monday, which is today, 1st of July, to trade into this volume imbalance right here and fully close off this gap, right? Fully close off this volume imbalance. Now, price is quite sensitive towards these volume imbalances. It kind of draws into it like a magnet. From what I've seen and noticed anyway, these volume imbalances are significant. You know, if price is supposed to go higher, 9 times out of 10, if there's a volume imbalance right there, it would always want to revisit that area before it essentially makes its expansionary move. Now, the reason why I do not want to see this weekly cap essentially to be tagged is because of this bullish order block. I'm anticipating this bullish order block to hold price. Okay, now we've got the 50% of this bullish order block, which is right here. That's the mean threshold, this blue line right here, and you can see how there's literally a volume imbalance right within the mean threshold of this bullish order block. Now I would want to see price come and have a full candle closure right here, and if Monday traded into here and we've got a full candle closure, I would want to see Tuesday come and sweep this Monday previous day low to then offset, accumulate more orders, essentially to go higher, right? Now we've also have another bullish order block right here and another one here too. So we've got two strong line of defense, which is our high resistance liquidity run right here. So for tomorrow, well for today, I'm recording this midnight by the way. So if I say tomorrow, it's kind of strange. But yeah, I would want to see price come and trade into this volume imbalance and then continue trading higher. Now if we go down onto the 4 hour, you would see right here we've got a significant consolidation right here, right? And my eyes are essentially drawn to this right here. This is what I would like to see get run. This is the first stage of the this is the buy side liquidity I wanted to see us run essentially last week, but we didn't do it. And this is the original consolidation here also, which I want to see you get run through. And we have a gap here, which price would want to essentially fully trade through that too. But yeah, this is the market maker buy model I was talking about, the first one, and then we've got the original consolidation there too. Now, if my bias is right, the main threshold of this bullish order block should support price. We will tag this volume imbalance and then offset price to go attack this buy side liquidity and eventually make our way up to this market maker buy model. And once price kick through this original consolidation right here, it should not have any issues running through this high. Now if I go into the 4 hour, you can see right here, this is a significant consolidation right here. And we've also got a fair value gap which is resting above that. There's no way price will just come right here and all of a sudden reverse. It just wouldn't happen, especially after we've got these order blocks supporting price. Even if you go into the lower time frame, it's the same scenario. Once we traded above the down close candle, you see price displays and it comes back and find resistance right here at this bullish order block, and it continue trading higher. And it's the same concept we've got, right? We traded higher and validating this order block. We reject it. Price is coming back to revisit what the volume imbalance right here. You know, these volume imbalances, they're strong. They're like a magnet essentially. It's more they're like a magnet. Price will not essentially drive away and leave these, especially if they're in the dealing range. Price will always seem to want to come back and tag into that, have a full candle closure before it expands higher. I would say personally, these are a lot stronger than the fair value gaps, you know, but that's based on my theory from what I've seen after looking at so many charts. You can see there are some times where the 5 fair value gaps are left open, but with the volume imbalances from what I've seen, these are quite sensitive for price to come back to. Very sensitive, you know. So I'm watching this volume imbalance on the 4 hour and the daily chart as well. I want to see a full candle closure right here before price start to rip higher again. Now if we go into the Euro USD, I'm favoring price, to trade higher, potentially run these highs tomorrow. This buy side liquidity right here, and reject at the mean threshold of this bearish order block to come attack this sell side liquidity, and ultimately make our way down to this market maker sell model. Likewise for the GDP, we're expecting price to trade higher right into this fair value gap, and then we'll come and run these lows, tap into this fair value gap, and ultimately make our way down low. Now looking into Euro GBP, we have a mitigation block right here. It's the low. We've got a high, low, failed swing, displacement, right? Lowest down close candle becomes the mitigation block. Our price is currently trading into this fair value gap, and I would like to have this bearish order block at as a resistance to send price lower, which means that I'm expecting strength on the GBP compared to the euro. So therefore, I'll only be looking for shorts in the euro if the conditions are still the same. If price continue trading down low, I'll be looking to short euro, because if essentially this candle is trade, the next candle is going to trade down low. That shows strength on the GBP, and I'm expecting bullish DXY. And now putting two strong pairs together, you're likely to have more consolidation, and pairing a weaker pair with a stronger pair. That's how you get explosive moves essentially, right? Now up here we've got a high, low, high displacement. That is a breaking market structure. Some people say I just call it market structure shift or changing the state of price delivery. But people have so many different words for it. It technically just means the same thing. But this is a breaker right here. You can see how price came and tagged into the breaker, filled the fair value gap, rejected it, and started continue breaking down lower. Now this will then become our mitigation block, this candle right here. Expand that in time, you can see, we've had this little downtrend essentially being formed, but this is a mitigation block up here too. If I go into the 4 hour, that candle most likely will have a fair value gap. There you go. So I'm expecting price to come and run these highs, reject off this, balance this fair value gap, reject off this 4 hour bearish order block, and continue going down low. We've got relative equal lows down here, and market maker sell model down here. I'm still bearish, and I'm looking for shorts on euro and long on the dollar. But for my stage, I would like to see what Monday do by the time we get to the New York session, right? Because this volume imbalance right here, I would want to see a candle closure, or we basically revisit this price range right here. And if I just highlight that candle right there, and we go down to the 4 hour, you'll see that that's this volume imbalance right here, and we've got a fair value gap, but I don't expect price to trade into that. I don't expect it, but we can still give it room to get to that if we don't get candle closure up there. The weekly candle right here, I'm expecting this to be a breakaway gap, but I want to see a price come into it. So from our weekly analysis, I'm still bullish on the dollar, and yeah, going into the next week, I would like to see a price trade higher. The days I'm looking to trade, ideally, is Monday, New York session, and Tuesday. But I am also wary because we have news events all day on the euro. You know, we got the prelim CPIs. So if we gain a lot of strength on euro, most likely GBP would be favorable to trade. And Tuesday we've got core CPI on euro, so definitely I might avoid euro on Tuesday and look for GBP. And we've got the Fed Chair Powell speaking as well at 9:30 New York time. So I'm expecting this is a heavy week, so I'm gonna literally go in limiting my expectations for this week, especially it's the first week of the month. There's gonna be a lot of manipulations, you know. So I'm not looking to do no heavy trading. I'm only taking trades that make sense for me, but essentially letting this week go. Following week, you can see we've got a lot more clear calendars, not much manipulation compared to this one. The first week of a trading month is always heavy loaded with these amount of news events. Now, most people will lose their equity during this month, you know, the first week of a new month. But I would say just lower your expectations and wait for better days. As you can see right here, I got nothing. Monday, Tuesday, most likely. The following week, expansionary moves out on a Friday and a Thursday, and potentially Wednesday. Week after that, you got clear days to trade as well. All days can be manageable, but the first week of July, you got NFP. Lower your expectations for this month. It's not worth it, you know. But yeah, that will conclude for the weekly analysis. I'm expecting a long euro, a long dollar, short euro, and you can, as you can see right here, we've got a big gap right here. So the market would want to revisit that on the 1 hour. What is it really drawing to? It's drawing to this volume imbalance right here on the 4 hour. 4 hour. When you see prices literally just opening with gaps, that shows you it's in a hurry to really rebalance the gaps on the 4 hour and daily as well. Volume imbalance right here, which is this range right there. I'm just going to draw it out. It might not be clear on the 1 hour chart, but it's all about the high time frame, right? High time frame is basically the parent of the low time frame. If the high time frame do not make any sense to you, do not go in there looking to trade, because right now I'm anticipating this candle to come down here, but I do not have a strong confirmation it will get there. You know, I'm just gonna have to wait and see what price wants to do. This order block right here, I'm expecting it to resist price. I do not want to see price trade through it. If it disrespect this order block, this one, ideally this order block should provide a resistance, and I do not want to see price trade lower. A minimum here or here. This order block right here should offer some sort of resistance. But that concludes the video. Be safe and reduce your expectations for the next week, man. Peace.